Hey, how are you? Vladimir Ribakov here from Traders Academy Club. In this video I would like to show and explain how I managed to make 500 pips and still running on only 2 trades. About a couple of weeks ago I shared 2, from my point of view, amazing trading opportunities as they were developing and provided us great opportunity to make some profits. I am talking about Australian versus the New Zealandian, Aussie Kiwi, and the Euro versus the Kiwi, Euro New Zealandian. If you missed this video and you still want to learn and see what techniques I apply and what techniques I use here, right here next to my picture you would see these video suggestions right now explaining about these 2 trading opportunities. So if you missed it and still want to learn how and what did I do, just click here, watch the video. Now I want to explain how things develop and what can you learn from that for future. How can you take these techniques and apply that for future. Okay, so the first one that was presented was the Euro versus the Kiwi and then the Aussie Kiwi. That was pretty much where it comes from. Now, before I go and explain, this is what I want you always to remember. This is the key for successful trading, which I want to discuss about today. Now, I'm not going to show these trades to brag or anything like that. I have nothing to brag on. This trade was shared with you in the channel for completely free, to provide you some trading opportunities. What I'm doing here is just basically follow up and explain you. I plan my trade, I trade my plan, and I have very specific understanding what I want to see, how it should happen, and if it happens, I will trade it. And that's exactly what I want to explain here, and hopefully to help you in the future, for you to be able to make the same decisions correctly. So the first thing which traders don't have normally and must slowly but steadily develop, it's patience. Let's admit it, we all want our trades here and now. Why? Because we live in the instant world. Everything we want, we can get it right now. You go to Amazon and you can, with the, I don't know, price of $1 or $2 or $3, you can get your delivery today, in the very same day. A few years ago it sounds like imagination, craziness, right? So patience is something we all have less and less in our reality. But when it comes to trading, patience is one of these very important things and keys for a successful trading. You have to be able to wait for your setup to form. Most of traders work very hard to create a setup. They find some good levels, some support resistance, trend line, cycle, Elliott waves, whatever it is, it doesn't really matter. But most traders just find a level and then say, okay, now just let's find any reason to trade. No. There are official signs, there are not official signs. Official signs are those who verify your assumption. Not official signs and everything you can find just to prove yourself. Oh, I have support and divergence. Okay, I have a support in Fibonacci. Okay, I have a trend line, I have a channel, I have a candle pattern, I have stochastic, I have RSI, I have MACD, I have price, I have schmice, I have whatever it is. It's all stories we tell ourselves. There are official signs and there are non-official signs. Again, official signs will never guarantee you a profitable trade, but they will. Listen carefully. They will guarantee you start your trade from better starting point. Most traders attack once, attack twice, attack thrice, they fail, they give up, they blame the world, they blame everyone besides themselves, they give up on the position and then their position will work. How many times you found yourself thinking of a correct direction, trading it wrongly, losing money, giving up, and then the market moved in the direction that you wanted? How many times it happened to you? I bet on that it happened to you many times. Did you ever stop for a second, ask yourself, why does that happen often and over again? The answer is in this exactly: patience. Wait for your setup. Wait to get that. Done. And I will explain that in a minute. Multi-time frame verification has a lot of power and logic behind it, and the reason why I use multi-time frame verification, especially for the higher time frames, to choose direction correctly, is because each time frame represents a different length period flow of money. Weekly chart represents a long-term flow of the money, of the big money. Daily chart will make it a bit shorter. 4-hour chart even shorter, and so on. When you have few different time frames, few different representations of options expirations, of futures, of all the real world money flow, when you have few time frames verifying and telling you the same thing exactly, when they are rhymed, when they are synchronized and lined up for you, you have better chances. No, you will not get a warranty for a profitable trading, but you will get yourself much bigger chance because your starting point would be the best. Trading plan for entry and exit. This is another thing that traders simply don't do. They enter a trade but have no idea how to exit. Or moreover, they have an idea, okay, I want to enter, but they have no idea how to verify that. And these things are critical. You find a sign, how do you enter, how do you exit? Before you enter any given trade, have yourself a clear plan of what are the reasons for you to enter, what do you want to see the market does, so you can enter, and if the market does that, you would be in. If it doesn't, you will not be in. That's what I told before. By creating the setup, don't do that. Wait for that. If happens, you know how to work with it. If didn't happen, get it as a sign from the market for not doing that. And very critical, validation and invalidation. Listen and remember, the market does not care how sexy your lines you draw are, how amazing the knowledge of the analysts sharing any trades, myself or anyone else from any other forum. The market doesn't care of the lines, of our knowledge, of our impressions we do in YouTube channel or anywhere else. The market doesn't care of that. And if the market doesn't care of that, you have to understand that you better have validations and invalidations. Do you think that the market cares of Vladimir and how beautiful his lines or his planning is, or any other one in whatever the forum of traders is? No. The market will do what the market will have to do. That's why you must have clear validations, and more importantly, clear invalidations. What should happen or what might happen for you to get out? You probably heard this saying, cut your losses early, let your winners run. By theory it looks like, wow, so smart. It's extremely hard to apply. It gets easier at the moment you choose to accept it, this fact, and to apply your own invalidation. Then it becomes easier, because consider invalidation as trading rule for enter a trade. When it comes to rules to enter a trade, we all apply that easy. Oh, the moving average crossed. Oh, the trend line broken, and so on and so on. It's extremely easy to convince us as traders to get in a trade. Consider the invalidation or cutting the trade as entering the trade, and here is how. Imagine you buy the euro dollar. Now think about it this way. What will invalidate your chosen buy for euro dollar and will make you buy the dollar euro or sell the euro dollar? Think about it this way. What should happen for you to enter opposite trade? But don't do that as official opposite trade, because then you just hedge yourself and you find yourself with doing nothing. Just get out. But this logic helps traders, or at least traders I train in my mentoring programs. This logic helps them to be able to deal with these situations, because psychologically it's extremely hard to cut losses. Consider that as you enter a new position, but not official real position, just close the previous, but consider if you bought your dollar, now you buy dollar euro because you got opposite signs. Make sense? So try that. Let me know if it works for you, or generally let me know what do you think about this idea. If you have any other important tip to share with the traders that will view this video, please do so and leave your idea in the comments below the video. Okay, if you have any valuable point that could help other traders, please share. This is the purpose of this video. So now I want to go quickly here and explain how did that work. So the first thing was, again, as I said, multi-time frame. Weekly chart gave me triple cycle upside by creating 3 higher highs, 3 higher lows. Now, cycles is a technique I work with for years now when it comes with divergences and convergences. And this is exactly what I teach in my live trading rooms. So if you want to dig deeper, Traders Academy Club and my live trading rooms is exactly what you would need to understand this technique completely. So I got a triple cycle high upside, and then double cycle correction, false breakout, bullish divergence, and this is from the weekly chart. Now take a look what else happens here. It all holds in a beautiful zone of 50% of Fibonacci. Now more than that, when I use the expansion to find out how deep my correction down was, I figured out that it was 61. It was the magnet zone that I call here. Let me just mark it for you. Magnet zone is a zone created by 2 or more different cycles. So that was a massive magnet zone. And then I went down to the daily chart. Look what I got. Each of the weekly legs was a cycle by itself. This was the first one. This is the second one. And basically it turned to be a pure perfection. After that, we got a fake breakout here. Attempt down. Beautiful divergence. And again, if you don't have a clue what divergence is, first of all, you can enjoy from videos I have here in this very channel. If you are new to the channel, of course, I invite you to subscribe and find out all the materials you need. And to dig deeper, I basically have the solution for you, the Divergence University course, which you can see here next to my picture now. And of course, my Traders Academy Club, which we will lead you day after day explaining these very things live as they happen. So if you want to dig deep into these methods and of trading, that's what you better follow and do. And this was the main combination. Multi-time frame trading, multi and different combination of techniques. Here we got a massive engulfing, and the idea was buy retraces. How do we buy retraces? With a corrective cycles and bullish divergence for continuation. And then we got basically a simple sign from higher time frames, the weekly, the daily, and the 4-hour chart, which gave us here one move up, 2 waves down. Bullish hidden divergence was created perfectly, and this becomes as a, let me just mark it here, this becomes as a massive buy opportunity. And here you can apply any different entry techniques you have, Fibonacci's, moving average, cross, trendline breakout, false breaks, anything you have and know, and let it ride. And this is how this pair is paying us around 300 points already. Now what about to happen next? I believe that this area would become an area of a fight, and we should see that slowing down and starting some kind of correction, which it's early to judge a bit as for now, but some kind of correction downwards. So that's pretty much it, and that's again according to your trade preparation. You would apply here trade management, partial cash out, or protect your profits by moving stop loss to break even, or trade your profits, and so on and so on. The next one was the Aussie versus the Kiwi, another one which I use and apply multi time frames. Basically this was it, special cycle, bottom of the range, that's monthly. a beautiful bullish divergence on this double bottom with the spikes. Weekly chart showed me the same exactly by making two waves and bullish divergence which was in play, and of course the daily cycle that gave me the same assumption that we are going up. It was beautiful move down. Each of these legs was the cycle by itself, and here we got a false breakout, bullish divergence, convergence, and what I love to see, the principle of higher highs, higher lows, and basically verifying a bullish trend. All together led us for the conclusion we are going up, and as for now, we are going up, and we are going up for around 200 points. That's pretty much around 500 points movement in both trades, only two trades. And this is the next thing I want to discuss about. Most traders believe that in order to make more, they need to trade more. Now, that might be correct in terms of percentages as of the return, but for all those who trade pure value of money, fixed lots and such things, same value of each point, or pretty much same value, then the percentage have less importance. It's a bit different money management types, but what you have to understand that most traders aim to make, let's say, 500 pips every single month, and you don't need to aim to reach that target by making 100 trades, because not every trade will be profitable, right? Profit loss, profit loss, profit loss, in total 500. No, you don't need to do that. All you need is catch 1, 2, 3, 4 good opportunities verified by a few time frames to improve your chances, trade them, and enjoy them. I know it sounds simple, it's much harder to apply, that's why I gave you several tips in the beginning, but this is how it's done. You prepare yourself, you follow your plan, and you go and you trade it. And that's pretty much it. For more of the same trading ideas, articles, strategies, videos, I invite you to join my free, completely free, no-cost Telegram channel. You can find the link in the comments and in below the video in the description. And also I invite you to my live trading rooms to discuss about these things day after day live. Every single good opportunity that we find, we have it for you. We talk about that. Well, of course, using my own techniques, not all the techniques. Cycles, divergences, convergences, Fibonacci's expansion, and so on. Everything is in. So I hope to see you there with us. And that's pretty much it. Thank you very much for watching. If you have any questions, I'm available for you down in the comments. Leave your comment, and I'll do as we'll try to do a fast reply and to answer your concerns, your doubts, your questions, your feedback as soon as I can. That's all for today. I'm Vladimir Ribakov, Traders Academy Club. I'll see you soon. Bye for now.